Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, the first thing we're going to be looking at is the US dollar. And right now if we're looking at the US dollar index, you can see nicely yesterday I talked about this inefficiency resting right here, and I said this inefficiency, I'm watching this inefficiency very closely. Yeah, I need to change the dates. Thank you so much for your confirmation. So yesterday I talked about this inefficiency resting right here, and I said this inefficiency would potentially act as a support zone and then take price to the upside. And as you can see, price came into that inefficiency on the daily, mitigated it, came to the downside, mitigated this 4-hour inefficiency. We came back down again, took this sell side liquidity resting right here, and after that we broke structure, came back for a retest, retested this highs right here, used the high as support, and the next thing we saw was an expansion. And like I said previously, on Monday and Tuesday, this low resistance liquidity is going to be my potential draw on liquidity, where I'm anticipating to see the market gravitate to this position, taking out this buy side liquidity. And after that liquidity gets taken, the next draw on liquidity is going to be this high resting right here. I wouldn't be surprised to see an expansion to rally above that high, after which the next key level that I'll be watching would be this position. So maybe price is going to eventually rally above this or not, but don't forget we still have this ample huge inefficiency resting right here. And let's see what it looks like on the daily, on the monthly. And on the monthly time frame, you can see we still have an inefficiency here as well. So don't be surprised if you do see price coming up to mitigate the inefficiency resting right here. So right here is the inefficiency on the monthly, and already price mitigated it the first time, displaced to the downside, failed to create a lower low. So I wouldn't really be surprised to see another push into that inefficiency one last time. And if we push in there and I see a significant 4-hour break to the downside, I'll look for a sell on the dollar and a buy on euro for this to tank, because overall this still remains a low resistance liquidity and 12-month time frame still remains bearish. So if I was to be a seller in the market, this would be the best potential area for me to look for sales on the dollar. And if we use our Fibonacci, you can see right here, this right here is our extreme premium zone. This right here is our extreme premium zone. So if I'm to look for a major swing sell, I'll be looking for that major swing sell from this key level. Anything can happen from there and price could potentially slump to run sell side liquidity. So this is what I'm watching for my long-term move on the dollar. This is my analysis. Now it doesn't mean for certainty this is going to eventually happen in the marketplace, but personally what I do is I mark out key levels, what I'm anticipating to see, areas of liquidity, areas of inefficiency, areas of premium, extreme premium, discount, extreme discount, and then I wait right there looking for opportunities for price to rally into that position. So what I can do in this case is just to continue to look for a buy for USD XXX pairs to go higher into this position, running buy side liquidities. And after which, once we enter into the extreme premium, I'll be on the sidelines looking for potential shift in bigger time frames, shift in market structure in the 4-hour time frame. That's what I would anticipate to see. If I see a 4-hour shift in market structure, for example, let's say, as you can see so far, what the market is doing. Let me just remove everything on my chart so you can see this clearer. So for example, right now, if we look at what the dollar is doing, we've created a low, We've created a high. We've created a low. Let's say we create a high in here. Let's say we create this high. As you can see, this from this low, it edges into that position. This is a 4-hour low. This is the weekly low. If price goes into this position and then I see a break below this low on the weekly right here, I'll regard that as a significant break of structure, and I'll only focus on opportunity for dollar to go to the downside. Now, if we measure from where we are right now to that key level, we're not really so far away from that key level. That's about 1.19. So let's just give it 2% move. 2% move can be done in a week. We're not far away from this key level. So if I do see price edge into this position and slump to break this significant low, I will massively be looking for sells on the dollar. Every up close candle running liquidity coming into premium, I'll look for a sell to go to the downside, because like I said previously, I've been saying this, in as much as overall 12-month time frame I'm bearish, on the intraday levels, I've not really seen any significant break of structure to the downside on the dollar. So dollar can still edge higher and come into this position. Does that make sense? So that is my analysis. And if we do reverse that on the euro, you already know where euro should be going. And the trade idea, I did analysis on, even though I didn't get into the trade because I just didn't want to sell euro, because my overall bias on euro is bullish, but intraday level I'm bearish. So I was anticipating to basically sell it from this. So if we go to 30 minutes time frame, I was basically anticipating to sell it from this inefficiency right here, but later on I went to 1 hour time frame to see why I missed out on the trade, and this was why I didn't look at the 1 hour time frame, because the 1 hour time frame made it a lot easier to see and understand. This was the low, the high, the break of structure. And if we go to daily time frame, on the daily time frame, this was the inefficiency. This right here was the inefficiency. Price rallied above that inefficiency and then rallied above it, because there was this 4-hour inefficiency resting right here. It mitigated that 4-hour inefficiency. After that mitigation, all we would like to see from here, 15-minute shift in market structure. We go to 15 minutes time frame. We'll have a low, we'll have a high, we'll have a break of structure. This right here would have been potential entry, first entry for the trade. And right here, first entry, stop loss, the high, add extra 3 pips to it, 10.5 pips. That's the entry, first entry. Target, the low resistance, liquidity low, resting right here, 1:6.5. Second entry, after this mitigation, we'll wait for a 3-minute shift in market structure. And right here, even though this is 4 minutes, but 4 minutes structure is usually very similar to 3 minutes. Right here, this would have been the low, the high, the break of structure. My entry would have been the low right here, not the inefficiency. Now, the reason for this is because after a smaller time frame shift in market structure, don't expect a deep retracement. It can happen, but 7 out of 10 times it will not happen. We're working with probability right here. Stop loss, this high at 3 pips. 10.9 or 9 pips or whatever, and you can see how that would have been a beautiful entry, re-entry, and potential continuation to the downside. Targeting same key level. First entry resulting 1 is to 6.5. Second entry targeting 1 is to 6.7. Now, if we wanted to have a third entry, it would have been from the 1 hour time frame. 1 hour time frame, we use the inefficiency and then use this high as stop loss, 11 pips. Take profit, same location. First entry 1 is to 6.5. Second entry 1 is to 6.7, which is around 13%, and then third entry 1 is to 5.5, which is about 18% in total. Risking 3% to make 18%. So whatever we're risking, we're anticipating to make 6 times more than what we're risking on the trade. So it would have been a phenomenal trade if we had gotten into the trade. It's just, I don't like to counter trend a lot of the time because it creates a lot of confusion. Because sometimes you could be trying to sell it, counter trending, and then price comes into a major key level that you should have bought for a major swing move, and then you miss out on the major swing move because you're trying to catch a small swing sell. So personally, I don't like this low, and I think this low is going to get taken eventually. And if we go to the monthly time frame right here, you can see on the monthly we still have our extreme discount zone unmitigated resting right here. So I wouldn't be surprised to see price eventually want to visit that key level. I don't know when that's gonna be, but percentage wise that's about 2.9%, which is not really a lot, and it can happen in a week or maximum 2 weeks. 2 weeks of just consistent move to one direction can take us there. For example, from this high to this low, 1.67, and that happened within Friday to, so that happened in 1 day, 1.67%. It happened in 1 day price action from here. So Friday 7 June to Tuesday 11 June. So that happened within 3 days, 3 trading days. Friday, Monday, Tuesday, price went from here to this low. So if we can do 1.67% in 3 trading days, that means we can still do 2.9% in 6 trading days, which is about approximately, you just call it 2 weeks. So I wouldn't be surprised for that to happen, but it seems like a very long way down. And personally, the only thing I'm going to do is watch what the dollar is doing and take it from there. Maybe we just try and see what we can capitalize on for the euro. Already, if I wanted to sell this, I would have been selling it from here, here, here. Those were better sells. Selling from here is just making a little bit of profit because these were the major sells from here. Those were the really major sells. So that being said, we're going to look at Aussie dollar. Like I said previously, Aussie dollar is bullish, and in as much as I wanted to buy it from discount zone, you can see Aussie dollar is so bullish that it's not even giving us an opportunity to buy it from that discount zone, and it's disregarding whatever the dollar is doing. Dollar is edging higher, Aussie dollar is supposed to edge lower, but it's absolutely disregarding the price action on the dollar, and it's going absolutely insane to the upside, consistently moving to the upside. So you can basically see that in this case, this is what we call a cracking correlation. Aussie dollar has already cracked the correlation between itself and the dollar. It's supposed to move oppositely correlated to the dollar, but it's now literally going up when the dollar is going up. Now, like I said previously, in as much as I was looking at this key level, being a potential key level to look for a sell. I wouldn't sell it, and the reason I wouldn't sell it is because 12 months is bullish, and I hate to counter trend. And this is what happens when you counter trend. Price can literally annihilate your stop loss, just like this, for no reason. Maybe there's a high impact news. Let's check to see whether there was any sort of high impact news on Aussie dollar. So today is Wednesday. So there was CPI numbers on Aussie. You can see that 2 a.m. today, there was 2:30 a.m. today, there was CPI news on Aussie by 2:30 a.m. London time, and it was positive as well. The previous number was 3.6, forecast 3.8, and it came out 4.0, so which was higher than the previous data that came out. So that is the reason why we see this impulsive move to the upside. So personally, I'm still not going to jump into Aussie to buy it from here, irrespective of the fact that I want to see it come in here. Because take note, anything can actually happen here, and price can still come down here to run all the people that are already in the buy position. So the impulsive move is due to the news, the high impact news. But at the same time, it doesn't take away the fact that we're in a premium. And if you want to buy, if you want to take a trade, you want to buy at a discount. Right now, the only thing we can do is to be on the sidelines and allow price to do its thing. And if price wants to reach our key level here, perfect. If it reaches there and decides to now come down to run this low, great. We still wait. We just be on the sidelines, because at the end of the day, nobody can tell you for certainty what the market is going to do. The only thing we do is we use our trading strategy. We work with it. We look at the structure of the market. We look for equilibrium zones, discount zones, premium zones. We look for these things to make sure they align with our trading strategy. And when price comes to a discount, if we're bullish and the market structure on the bigger time frame is bullish, we're looking for an opportunity to buy it. You can see, for example, using the Fibonacci from this low to this high, you can see what happened. We came into an extreme premium and we displaced to the downside, came into a discount, expanded, went into an extreme premium, displaced to the downside, went into a discount. And this right here was the just early morning, this morning, price was right here, and then the news came out and it spiked up away from the discount zone, spiking into extreme premium zone. So now anyone who was selling this, stop losses rising right here, they all got wiped out. So we don't know what next the market is going to do. It's either it's going to continue higher to mitigate here, or it's going to tank and come back to start over again. So this is what I'm watching for Aussie dollar. Not really much else going on. Like I said, I'm just being on the sidelines pretty much this week. Not really so much interesting going on in the market. It's just going up and down, and that's not really the best trading condition. And another one, gold. As you can see, gold rejected very nicely from the key level I outlined last week. And after that rejection, we saw this displacement to the downside. So I'm still anticipating to see gold come down into this position. It's not really far away from it. And this is why it's very essential to be very patient in trading. 1.6%, and we're going to be there, which gold can easily do that in one day. That is how volatile gold is. Now, being patient is very crucial in trading, because if you were trying to buy, sell, you would have taken significant losses. So the only thing we can do is just to be on the sidelines and watch to see what the market will do. Mitigating this position, we're seeing a rejection. All we want to see is price come down here. And if it does come down there, we'll look for a potential entry into the marketplace to continue higher, because overall, we still remain bullish on gold, and we still want to see a continuation to the upside on gold. So that is my analysis on gold, and the next one we'll look at is GBP US dollar. I talked about GBP and I said if I wanted to buy it, I'll buy it from this key level, and so far you can see prices coming there very nicely, and it looks pretty much like a very good trade, but I'm not going to take the trade, not because I don't like the trade. It's just I already have a trade idea, a buy limit order on Ethereum, which I'm going to discuss in the next live stream. And if I'm to place another entry for any trade, it's going to be on Ethereum again. And if I'm to place another one, it's going to be on Bitcoin. So the reason I'm just trying a little bit avoiding Forex market right now is because it's just a little bit inconsistent. It's just been up and down movements. You take a buy, it wipes you out. Take a sell, it wipes you out. So crypto has actually been the one that has shown me consistent structural continuation. So I'm focusing on that a little bit more lately. But when I see forex market moving in tandem to what I want to see, I'm still gonna focus more on forex. Like I was talking about Aussie dollar. I like to trade Aussie dollar, but you can see how inconsistent it's been. Just up, down, up, down. I bought it, it took me out, and it still went to buy. I bought it again, it took me out, still went for a buy again. I bought it again, took me out. I'm like, okay, I'm out. I'm not gonna keep doing this. It's just gonna keep. I'm not just gonna keep taking losses and losses and losses and be cool with it. And even this price action, this was supposed to be my entry, and it took me out. This was my entry, it took me out, rallied, and then I was like, okay, maybe it's now gonna go to downside, or maybe it's gonna reject from here. And then it came down here and then expanded higher, and I'm like, okay, great. So I'm just gonna give the forex market a little break, and I'm still gonna come back to it eventually. So that is my analysis on the forex pairs, and I appreciate you for tuning in, and I'll talk to you all in the next live stream. Have an amazing day, everyone.